I'm going to run you through this morning what is hot and tasty, apparently. I'm going to fire someone in marketing for that. In emerging markets and in what we class as high growth economies. So I would hope what you'll take from this is that the insight will be interesting and it is reflective of trends that we are seeing globally in the industry as well. So a couple of bits about me, first of all. So as the slide says, John O'Brien, SVP of Commercial at dLocal, been in the industry for 14 years. The entirety of my experience is in enterprise e-commerce and working with enterprise e-commerce customers globally, helping with considerations of should we go cross-border, should we go local, did market entry for WorldPay in Japan and in other markets. And my current role at dLocal, because descriptions can be deceiving, is I run all of our revenue and our marketing functions. And the majority of the content that we'll run you through this morning is reflective of dLocal's experiences in the markets in which we are predominantly operating in today. Okay. All right, we'll just give you guys a little bit about dLocal. So dLocal is a NASDAQ-listed company, primarily focused on emerging markets. We provide pay-in, pay-out, issuing, and fraud services in 37 countries today across Latin America, Africa, and Asia, providing access to 2.3 billion new users in these economies globally, all through a single platform and contract. The company was founded in 2016, and our stated goal is to provide the single best financial infrastructure to emerging markets globally. So you will not hear from us that we're going to developed economies. We're not going to be working in Japan. We're not going to be working in the US or Europe. This is our thing. This is what we're going to be doing. And the next slide I'll show you will hopefully make it apparent why that's a key part of our thesis. So what are we going to cover today? So we're going to go through a few things. One which may shock you, which is the world's population by the year 2100. I'm not sure most of us will be around to see it, but the trends that are occurring in taking the population to where it's forecasted to be at by the United Nations in 2100 are obviously all occurring today. And I'll show that to you guys on a slide in a moment. We'll then look at the opportunity in emerging markets. We'll cover off trends in EMEA, which will be Africa primarily, Asia, and finally what trends we're seeing in Latin America also. Key themes from the presentation. Hopefully most of you will have got the concept pretty quickly here. We're big on emerging markets, and we think that is the next battleground for enterprise merchants and people trading globally. And certainly when you see the population statistics, I'd imagine a bell will go off in your head on, do we have a plan for these customers? What are we doing in those markets, and what payment solutions are we going to be offering to those clients over the course of the next few years as well? Other thesis from us is going local is now a must-have rather than a nice-to-have. And then finally, I think my colleague mentioned this as well around all local payment methods are not for everybody. So if you think about some instruments not having chargeback rights or some instruments not offering refunds, etc. If you're a retailer, that can induce different calls into your call center, increase operational costs for FTE and things like that as well. So hopefully during the course of this presentation, but also when we're on the panel, we'll be able to get to some of those specific examples. So without further ado, my favorite slide that I found recently. As I said, maybe we won't all be around at this time, but the trends that are driving this slide here by 2100 are already occurring. Like if you juxtapose this with developed economies, like Japan is experiencing a decline in population, UK and Germany as developed economies are pretty flat, I think growing at 20 bips in the UK or something, or in Germany, and something broadly similar in other markets across Europe as well. So you could look at this slide and say it's an amazing thesis for our company and why we're investing there, which is what we like to think about it. But my main takeaway for the audience here would be, what are your plans for these markets today? Are you localizing? Are you offering local instruments to avail of the new consumers that will emerge from these economies that will drive the underlying growth for your business also? Okay. Right, and we'll focus on what's hot. We really have to get away from this terminology, but maybe what's interesting in EMEA. EMEA for us specifically will be more on Africa. As I mentioned, we just focus on emerging markets, so we're not really doing anything in Europe. So in Africa specifically, we'll focus on mobile money. It's called Mo Money locally, which is not a notorious BIG reference. That is what people call it locally as well. It's called mobile money. And its importance across the region. Like many people have heard of M-Pesa, but actually it's really popular in a number of different markets. We'll cover Fari in Egypt, which is used by 30 million consumers there. A population's 100 million people. And Fari is a voucher-based payment instrument that works in a similar fashion to Boleto in Brazil or OXXO in Mexico as well. And then finally for Africa, we'll cover recent changes to restriction in the US dollar for Nigeria, which for a number of you in the audience may be affecting your acceptance rate on a cross-border basis into Nigeria today. And again, huge market, 200 million people, and growing at a rate of 2.5% a year as well. So really important to have a plan for that market also. Okay, so mobile money, what is it? So it's a service that stores funds in an account linked to a phone number, primarily implemented and driven by local telecommunication companies. So this in effect has replaced banks for a number of consumers in Africa. Uses really, really simple technology. So SIM toolkit and SMS. So it means you don't have to have internet connectivity. And if any of you have lived or work in Africa, like my wife who grew up there, you know, internet connectivity can be particularly spotty there and challenging at times. And this is a way that through delivery of these telecommunication services that risk has also been mitigated and has been proved hugely popular in a number of markets. So M-Pesa, as I mentioned, is probably the best known and most advertised outside of the continent, but mobile money is also incredibly popular in Ghana, Tanzania, Senegal, Cameroon, the Ivory Coast, Uganda, and Rwanda as well. So huge share there to take from folks. And to give you a sense of the ease of using mobile money, the mobile money ratio across those markets to banks is about 60-1. So really, really easy for people to go, drop the cash in there, do their peer-to-peer transfers, etc. So again, if you're contemplating capturing these consumers in this market, really, really important that you get a grip on what is mobile money and how you might be able to implement it into your checkout flow. So a quick slide on the numbers. I think I covered some of this as I ran over it overall. So you know, stores funds and links to a specific number. Implementation I mentioned is done with a very large number of mobile agents, which allows it to be ubiquitous payment instrument across the country as well. There's none of the traditional fees that is associated with banking, so you don't have overdraft fees, you don't have I've got a really rubbish maintenance fee with Barclays at the moment because I just moved back to the UK. I have no idea why I'm paying it, but I have to pay it there. You don't have any of that if you're using mobile money in Africa. So really, really helps get the unbanked into the economy, but also giving those people the option to partake in online e-commerce and also in person as well. So, you know, really important initiative on a number of fronts and something you definitely want to have a plan for. Funds are also protected by local regulation, and then all transactions are PIN authenticated. So they're all, because we're in a European audience too, you've all been painfully aware of two-factor authentication the last few years. All of these are backed by two-factor authentication as well. Quick slide on the flow, because we're obligated to put it in just so you guys can see it. So user selects their preferred payment service. In this case, we've got with M-Pesa, enters the 4-digit PIN, finishes the transaction, and receives a confirmation to their mobile phone. Just conscious of the time here, trying to get us back on track. Fari, as I mentioned, is the leading payment instrument in Egypt. Even though it's a leading online payment instrument, somewhat ironically, people use it to pay offline. So they'll go to their checkout, take their voucher, go to a local store and pay over the counter in a very similar fashion to what we see with Boleto, as I mentioned, and OXXO in Mexico as well. And here's one specific optimization that we saw when researching the market during UAT and conducting research on different local Egyptian sites. So we found that actually in Egypt, although it wasn't required on the Fari page, Egyptian websites typically picked up the mobile phone number. So we included the mobile phone number in our Fari checkout, and it increased acceptance for the merchants we're processing for locally in Egypt by 19% overall. So what's the takeaway for the audience here on something like that? You know, it's not just enough to implement the payment instrument. You also have to think through what are the usual behaviors in that particular country, what kind of things are people used to doing when they check out that are very familiar to them. So if you went to other markets like Korea, very security-oriented market, you'd want to make it very clear that the checkout as you go through that flow is secure for that customer, etc. And these global markets are no different as well. It's not just enough to implement the method. You're also going to need to work with people who are going to advise you on. And I think my colleague mentioned earlier, people who are on the ground who understand the market and can recommend to you implementations to make to ensure that you get the optimal acceptance from these projects. Okay, we'll cover the Nigeria example currently. So many of you may know Nigeria's main export is oil. It imports almost everything else from a good and service perspective. So it is not an infrequent occurrence within the market to restrict the access to US dollars. I think most recently the cap on US dollar spend monthly for a US dollar cardholder in Nigeria was around about $100. That cap has now moved down to about $20. So if you think about a scenario here, if you're like a Netflix or a Spotify, who ironically have now gone to localize because of this issue, if you're doing that on a cross-border basis and the customer is signing up to your Spotify service in the UK, for instance, you would start to see pretty rapid declines on those transactions due to the reduction in the open to buy for those particular consumers. So the idea from the government is obviously to keep Naira within the economy, keep people spending Naira, etc. So they've put the restriction on consumers. They have not put the restriction on financial service providers like ourselves. So the solution we've offered to consumers there or to merchants there is to localize the acceptance of Naira. So we present the transaction in Naira locally. It is settled locally. We are settled back Naira. We convert that back to dollar or euro and remit it to our partners outside of the market too. So if any of you in the audience are experiencing some of those declines today, this will 100% be the reason that is happening. We expect to see more of this across Africa. Some of you will have seen currency restrictions that were put in place in Argentina mid last week as well. And as currencies depreciate against the dollar and people look at what are the natural imports and exports from the countries, you can expect in a lot of emerging markets that this will continue to be the case as well. So really important one to pick up. Okay, that was it for Africa for us. We'll jump on to India quickly. So we'll cover a couple of these this morning. They're all real-time payment infrastructure. UPI in particular was driven by the growth in Paytm that the Reserve Bank of India saw. So Paytm was another online bank transfer service, a real-time bank transfer service that gained incredible popularity. So under the auspices of, I think it's called the NPCI in India, they set up the unified payment interface. And it's gained huge popularity over the course of the last 12 months as well, particularly given some of the mandates that have come out in India. 100 million monthly active users, as I said, real-time online payment system, and instant payment confirmation to merchants as well. And this is the future in India. This is what the government want people to pay with. There is caps, as I'm sure a number of you know, on the merchant discount rate in India too, making it less attractive to process card transactions in the market. So if you're in India and you're not offering UPI, you really are missing out. It's used by consumers broadly, and it's very heavily pushed by the central bank and the government as well. So just for awareness, I'm sure a number of folks in the room are aware, but there was a subscription e-mandate that came out in India last year. That's, I think, has also particularly driven the growth of UPI. Consumer consent is required to create an e-mandate. When the user allows merchants to auto-debit funds without authentication, I think that Indian rupee amount is equivalent in today's currency or to dollar to about $63. So if you've got a service there, I don't know, maybe you're offering like Microsoft Cloud Services or Microsoft Office or something for $100 a month, then you're going to have to keep re-authenticating these transactions in India as well. Issuer is required to create a unique ID for each mandate, which is then sent to the processor. And then real gotcha at the end is the pre-debit notification, of which there is a variety of ways in which the consumer might tell you that they no longer want to continue with the service, making it more difficult for you to triage what that is and how to get to you as well. So yeah, really, really challenging in India. For any of you who've worked there, The RBI, the Reserve Bank of India, very, very active in India. They send out a lot of mandates or edicts. In fairness to them, I think they often go back and correct and extend out the deadlines for delivery of. I realize I haven't turned to this side of the audience. The third time I've been up here. And they often send out these mandates and edicts. And what I've seen traditionally is the dates for these things continue to get pushed out. So there's a more recent one around tokenization, which was meant to hit in July. That's now been pushed back to, I believe, September or maybe even October of this year. But this mandate is very much here and live today, and really important if you're offering a subscription-based service that you have a plan for it. Okay, it's kind of more of what I said on the last slide, and with the interest of time, I'll move on. And this is the solution we've created, which accounts for both cross-border and domestic use cases. So a number of you will have, you imagine with the billion-plus people in India, significant opportunity for cross-border commerce. A number of you will be localized in the market as well. And the solution we've designed here for that allows for subscriptions to be ran. I also mentioned network tokenization mandate or tokenization mandate, really, really important one. Our team is here this week. We built a solution for that as well. I think most of them are over in the corner there. They can give you a wave. Conveniently dressed the exact same way as I am, so you'll be able to identify them. And we've got a booth outside, and they'll run you through our solution in India there in a bit more detail. Okay, would be remiss of me to spend all my time on APAC covering India, although it's a huge market. No major surprise to anyone here that Alipay and also WeChat Pay, which we should have included here, are the preeminent, the dominant payment instruments in Asia, obviously driven by the Chinese market, but have also extended into other countries outside of China as well. What we're going to talk about briefly this morning is a couple of new wallets that will be of interest to folks here, particularly with a focus on Indonesia, and that's OVO and ShopeePay. Okay, so OVO did about $10 million worth of transactions in 2020, forecast to 4x that by 2025. Shopee, a number of you may know, is the Shopify for Asia. Huge growth since they launched in 2015. It's the largest e-commerce platform in Southeast Asia with 343 million unique visitors a month. ShopeePay is predicted to do 4 billion, or did 4 billion in 2020. We'll look to do 17 to 18 billion by 2025. It's the most used e-wallet in Indonesia as well. So really, really important that folks are focused on capturing the share in that particular high growth market, that Shopee and ShopeePay is something that you'd look at implementing along with OVO as well. Okay, and we'll get to, we have about 2.5 minutes, so we'll try and get through it quickly. So finally, Latin America, which is obviously home market for us with our HQ in Uruguay. Cash, as always, is, I wouldn't quite say king, but is still key in Latin America. So although COVID accelerated the move to digital, cash still accounts for roughly 17% of all transactions across Latin America today. From the research we've carried out, cash is still preferred by 68% of all Brazilian consumers as well, so the 215 million or so people that live in Brazil. And the predominant methods of enabling cash-based payments, particularly across two of the major markets, is Boleto in Brazil, as we mentioned, but also OXXO in Mexico as well, which we'll look at on the next slide here. So very, very similar to the slide we showed on Fari, largest in Mexico, 16,000 locations. You know, I would encourage merchants not to be afraid of this flow. The brand is heavily recognized in Mexico. People feel comfortable paying for it. Customer chooses cash payment to checkout, goes to an OXXO store and completes the end transaction. And like any other voucher-based payment, and it's important to think through this as you're a retailer or a digital content merchant, etc. The authorization is not instant, clearly, because the consumer gets the voucher online, goes to the store. You know, we're people, we move around. Something happened on the way to the store. I couldn't get to the store today. I live in the countryside. Maybe I'll get to the store later in the week. So it's really, really important that you're researching the customers you have to, the demographics, understanding the ages, etc. So you're making informed decisions when rolling out these payment instruments. Otherwise, as you gauge it from an ROI perspective, it can be increased sales, but it could also mean increased FTE impact and, you know, calls into your call center, emails into your support staff, etc. Okay, I think I'm 23 seconds. We're not doing too bad. Okay, we'll quickly cover PIX. So PIX, again, driven really by the success of UPI in India. So a lot of people were monitoring that situation, seeing how well it went. PIX has seen phenomenal growth since launch in November 2020. It's an initiative entirely driven by the central bank in Brazil. 120 million individual users. As I mentioned, the population of Brazil is 215 million people. It's roughly 45% of the adult population are using PIX today, both online and in person as well. It's a QR-based method, so typically linked to your bank account, but it can also be linked to a wallet. So like Mercado Pago have an integration with PIX for Brazil as well. And in our view, you'll continue to see broader adoption of PIX even outside of the rapid development we've seen over the course of the last 24 months. It's a really big government initiative. They've ran specific schemes to drive adoption to date, and we'd expect to continue to see that happen as well. Just over time, but I'll finish on the last slide here. So the last two real-time payment systems, these are more up and coming and ones to track, I would say. Our view would be a lot of governments are going to push these methods. Like, you particularly think about the characteristics of emerging markets that I mentioned. So, currency restrictions at times, people being unbanked, etc. These are great ways of government tracking spending in the economy, also keeping spend within the economy as well, and have a really good grip on it. So I think you're going to see more of these type of instruments pushed out over the course of the next few years. And the two that we're keeping a very close eye on are CODI in Mexico and CVU in Argentina as well. Okay, so yeah, final slide, guys, and themes I mentioned at the start. So, in our view, it's a thesis for our company and our continued growth is, high growth in emerging markets are the new battleground in terms of expansion, hopefully validated by the slide you saw earlier on population expansion as well. Going local went from nice to have to must have, and then big question for people in the audience, and maybe we'll get to some of this at the Q&As, are the local payment instruments right for your business? And just because one customer or other merchant has done it does not necessarily mean it's going to be a fit for you and what you do as well. So it really, really is important that you work with people who guide you through that process, and you engage your brain and do some critical thinking yourself for you and your own business also. Okay, that's it for me, guys. Thank you.